West Texas Intermediate and Brent are the two crude oil benchmarks we track daily here on the global exchange. But those benchmarks represent the price of oil from the United States and from the North Sea, not the Middle East, where 60% of the proven reserves sit. The Dubai Mercantile exchange is out to change that with Oman crude oil futures. So why has this benchmark gathered little momentum from investors? I put that to the chief executive of the Dubai Mercantile Exchange, Christopher Fix.
The really key part is to ask them to look at where the price formation is for the east-on-east trade flows. And it's not with West Texas Intermediate, which is half a world away, or Brent, which is out of the North Sea. Those things have nothing to do with the actual crude that's being used in either the refineries that are turning out the jet fuel for the airplane industry, or in the business that's coming through the Straits of Hormuz. Nobody is buying light, sweet crude on this side of the world. They're buying heavy or Middle Eastern sour crude, and that's the crude that we trade on our exchange.
How difficult is it to change the mentality, in your view, right now, Chris, because of this region sitting on 60% of the proven reserves, but not the willingness to shift over? What's blocking that willingness?
You have to develop your own relevance as a contract. And this is really the key thing that we're doing. In terms of engaging the producers, the consumers, the guys who are in the different parts of the value chain, like the financial institutions here in the Gulf, and also the ones who are doing the trading. And they understand that in the long run, Brent is not going to service their needs. They have to have something that's better and closer to their customer base and their production base.
So Dubai and Oman utilize this benchmark of their investors in this operation. But what's it take to get Saudi Arabia or Abu Dhabi or Kuwait to kind of see the light in terms of your positioning on this? I
think that they have to come in as part of the ecosystem, which we're developing in the region, which is to see that when you have the growth of West Texas, or you have those benchmarks out of Brent, you've seen all of the players in the industry come in, and we're gonna bring them in when they see actually that the trading volumes and the relevance for the contract matches the uses of the consumers in the region.
What is the trading volume now? You only have a fraction of the market, which must prove frustrating as you try to build momentum here.
Well, after 5 years, we have a very good, technically successful contract, and we're at 3,000 to 5,000 a day, which is 3 to 5 million barrels. Of course, we want more. We want a lot more. We want 10, 15, 20 million barrels, and we're going to address that patiently with our shareholders, and of course, we do believe we're going to get to those levels.
You know, it's fascinating. If you break down the world here, you can almost slice it in half between the Middle East going to Asia, and of course Europe and America on the other side. But the two dominant oil contracts are coming from Europe and the United States. It seems almost dated in its strategy.
It is, because what you're seeing in terms of development, and the reason that you're here is because the East-on-East story is the one that's the most exciting and growing. All the demographics are, of course, and the economic strength are coming from the eastern side of the world right now, plus to the country with the least debt. So we believe in the historical inevitability of the fact that the need for this benchmark is going to prove very great in the years to come.
It's interesting. Are you planning to offer other products in jet fuel, natural gas? What do you think is the future here as of a fossil fuel trading hub?
We definitely think that working with the other Emirates, for example, you know that Fujairah is building tremendous capacity. This is an area of great interest for us. But anything that allows us to show the market price formation for east-on-east trading and what the trade flows actually are is going to be of interest to the DME.